Greetings, everybody. This is Jeff Scott. As you can see in the lower right-hand corner, it's a little bit after 7 p.m. on Sunday, September 17th, and this is my weekend review. There will not be a weekend review next week. My mother-in-law, who was extremely important in my life, passed away this weekend. You might ask, why am I doing this? That's a good question. My wife probably would ask the same thing, but this is something that keeps me sane and I enjoy doing. So what the heck? Next week, I'll be with the family, so I certainly wouldn't count on it. I entitled today, The What Me Worry Rally Rumbles On, and I'll end the initial upfront presentation with, I think, a very provocative question for you. This is for education purposes only. Any recommendation in the sphere of education and investment advice. I'm a doctor, not a broker. I am independent. I pay for all the tools I use, and no one pays me to say good things or bad things about anybody. And trading involves risk. You and you alone are solely responsible for any investment decisions you make. Be your own guru. That's how I describe my trading. But more importantly, when I teach somebody, and it's what I learned from Ian Woodward. Here's Ian over here. I think the way to trade is to either create something yourself, in which case you can be like my friend John Person here, the author, mentor, developer of indicators, packages, etc., or you could learn from a lot of smart people and then create a methodology that works for you. And that's what I'm doing. And I call it, when I mine, the Be Your Own Guru. And I remember very well Ian about 15 years ago saying to me in his English accent, which I can't do, Jeffrey, I'm not a guru. I teach you to be your own guru. And I think that's what you should try and strive for. I started with Canceling, which was O'Neill, improved by Morales and Catcher, taken to HGSI with Ian Woodward and Ron Brown. I mentioned John. He's just a great trader. I've been trading since I went to med school, and I've learned so much from him. I learned a lot about what stocks to take from Canceling, but I learned how to trade them and make money with them from John. Van Tharp, the guru on money management, position sizing. My buddy from the Northwest in Canada, George Lee. Just want to let you know that Greg Mills is having his annual October meeting, 27th through 29th. George Lee is one of the speakers. I think the meeting's all about George. Allegedly, David McClellan might be coming. David is an incredible trader. Greg Mills is the person, if you've been to the meeting, you know how to get a hold of him or George Lee. GAM72054@AOL.com is Greg Mills, but it's a meeting that I highly recommend, and I would be going if I wasn't going through the issues at home. And this is Guy Cohen. He is I got to know him of late. He's got some interesting websites. He's got an indicator called the OVI, which apparently looks at the institutions and the big money guys. And it's been a nice supplement. And for somebody who's a beginner and scared by some of the terms I use, not a bad place to start with Guy. And he does have some great tools on his website. I have a lot of different programs, a lot of different tools. I need TradeStation or Thinkorswim. I'll use both of them tonight probably. HGSI is my analytic tool, supplemented by EdgeRater. I'm a fan of seasonality, but it does not override technicals. And there's a number of great websites out there. Just calling out again, John Person's live meeting Thursday, Friday, and Saturday, November 30th through December 2nd. I'll have a one-day event post that. I think this means in the $1,400 to $1,600 range for 3 days. If you're interested, reach out to John or his wife, Mary, at the phone number here. Here's their website for more information. If you need to ask me a question, hgsidoc@gmail.com. I try to answer everything I get. My meeting will be December 3rd. Yes, this is a dated statement, but it's not any different. Maybe the numbers are a little bit different. Join me as I demonstrate and teach my favorite tools and strategies that have led me to a seven-figure return in 2017, merging my learnings from Ian and John. I trade without being tied to my computer during the day, requiring less than an hour each night, and I do this full-time running and building a company. I'll talk about the principles of HGSI I learned from Ian, and then how I merge those with what I've learned from Alexander Elder, John Person, and other great traders. I'll talk about how I use those to find my A trade, something I've learned from Alexander Elder, which is finding that great trade. How I manage this trade with stops, position size, and size. Show you how I use options to drive higher returns. How I do this using TradeStation, Thinkorswim, and then putting it all together. Housekeeping, the meeting will be at the Palm Beach Garden Hilton Garden Inn. $400 if you're attending John's meeting, $500 if not, limit to 12 attendees. I'm getting close. I'll take you out for a great dinner on Saturday night before, and then I'll provide breakfast and lunch during the meeting on Sunday. All attendees get copies of my slides as well as MP4 videos. Please note, I do not have an offer that allows you to buy the slides independently. If you want them, you need to sign up for the meeting. The website for HGSI, of which I have no economic incentive. The only incentive I have is I like to be able to call the proprietor and say, give me this indicator, do this for me, please, or request a new indicator. Two key things here, the free 30-day trial, as well as under investing strategies where my arrowhead is. If you drop that down, you'll see lots of videos by Ron Brown and I. Ron Brown is really an expert at HGSI, much more than I am. I try. I think I do pretty good. We trade totally differently, perhaps complementary to each other, and I think you can learn from both of us. Stock patterns are cyclical. This has been an interesting year. Every time I think we're rolling over, it turns out it's really a buy signal when we go higher. And we had this conversation over the last couple of weeks, and we've been in a nice run over that period of time. It still feels like we've truncated the top, and we run up, we come down, we run up, we come down. And whenever I think we're breaking out or falling down, we correct the other way. We'll see. That makes it tough to trade because if you think the market's going higher, you want to be aggressive. If you think it's going to be dropping, you want to be aggressive to the short side. And when it's confusing, you're going to have smaller positions, less positions, and raise cash. And I've been in that position over the last month or so, but I've become more bullish, and I'll show you why. Of course, that could end tomorrow. Friday sector review, you can see lots of red. I'll highlight some of the key. Energy, which has been perking up all week, was kind of mixed last week. Financials, I'll show you rates rose, and the financials are up some, including the broker-dealers and the credit cards. Industrials showed strength. Technology was strengthening, including the semiconductors. All of these were green. Staples and discretionary weak. Retail mixed. Certain things like Abercrombie and Fitch, American Eagle Outfitters have had nice runs. Utilities mixed. Healthcare devices got hammered. Pharma did well. Insurers started to get hammered. Casinos were weak. REITs mixed. Home builders mixed. And gold was soft as the week went. That's Freeport-McMoRan, which is as much a copper play on the top there. So a mixed market. See if we can find some of the reasons for that. In the upper left-hand corner, the E-minis, and then the NQs, and then the YM, so the NASDAQ futures, the E-mini futures, the NASDAQ futures, the Dow futures. The lower left is the IWM, which is an ETF for the Russell 2000, the VIX, and the dollar. So to me, the key things here in the daily is we're in an uptrend that all three of the ones on above. And even though the Russell had fallen down hard, it's probably got the best angle of descent of all four. So on the daily, all four of the indices are in nice uptrends. In each of them, the 50 is above the 200, prices above the 50. And as soon as the Russell 17 crosses above the 50, all of them will have the 17 above the 50 and above the 200. That's pretty bullish in my book, and you can see we're setting highs of the year on balanced volume as we continue to move higher. Bullish. VIX higher than it used to be, but in a downtrend, still bullish. And the dollar tried to rally, failed at the 17-day, which is descending, and dropped back down. So I would say the dollar continues weak, although it did have a little bump last week, and the major indexes on the daily look good. On the weekly, the same story. Uptrends everywhere in PPS buy signals on all of them, including the Russell. And you could see on the weekly here, or I can see probably better than you, that the VIX dropped a lot. And the dollar, again, fails at the 200 and is struggling down here. That will have impact, obviously, on things like gold. And then lastly, maybe easier to see, I've got columns of the E-mini. Whoops, hit the wrong button. The NASDAQ futures, the Russell futures here, the NYSE and the Dow futures. Daily, in the middle will be weekly, on the bottom monthlies. And a couple of things to point out. The choppiness that we saw in the short term is pretty much resolved to the upside, OBV on the daily on each of these is pointing up. On the weekly, we are in weekly buy signals on everything with OB and AD lines. AD line up and OBV up on the E-minis. On the NASDAQ, the OBV is just breaking over its moving average as it is on the Russell. Looks good on the NYSE and on the YM. And on the weeklies, everything looks good. This is a super strong market. Question is, until when? Now, why were banks showing a little life this week? Well, rates rose. Here's the 10-year on the left, 30-year on the right. And notice the descending trend line that's been in play for many months. And this is a weekly chart, and we peaked above this on both the 10 and the 30. Is this a head fake? And rates are going higher, which is good for probably good for the dollar, good for banks, bad for gold, bad for home builders ultimately, or are rates coming down? Will the Fed have trouble this week? They meet this week raising rates because of Irma and Harvey. Really interesting to see. AD lines, you can't see this well, but you have to trust me that the AD line, which is in white rather, has turned up above the S&P 500, which is in yellow. And so you actually have the AD lines leading price on both small and large stocks. If you look at breadth on the stocks above the 200 and stocks above the 40, we increased, not overbought, which would be up here, but getting improving. Now the 3-month new high, new low is getting into nosebleed territory. I've talked before, this is my short-term indicator. When it gets up to this line, it always sees a reversal in the market. When it gets down here, you see reversals the other way, and we're creeping up there, but it still can go higher for a number of days. The daily McClellan, I guess the most outstanding thing is the SP keeps trucking higher. The summation index is trying to get a higher high. It had been having lower highs, but maybe that's different. Higher lows and lower highs. And notice on the oscillator, we got back to where we were at the end of last year. I use this for extremes. Here's just the weekly. The buckets, 80% of the stocks in the S&P 1500 price closed above the midline of their Bollinger Bands, bullish. I have 14% of the stocks in the S&P 500 are above the Bollinger Bands, not quite overextended. Notice very few stocks are down at the bottom of the Bollinger Bands. At some point, you'd expect a reversal. Nothing appears to have to be imminent based upon this chart. There's been no Hindis going back until late May in the NASDAQ. I didn't go back that far. And in the NYSE, there's been nothing for a couple of months. There's no Hindi signal on the board. Market tone, we did flip to mostly green. We look at the Woody indicator, and you could see that the S&P and the, I'm not really good at reading these things in small print. I look at it mostly for Gestalt, and you could see that we are in a buy signal more than we are neutral. This is a sell signal, and in between is choppy. That's as good as it's been in months. And then sectors look good, and the only sector that's weak is utilities, and that's not a shocker. You'd expect utilities, if the market is rebounding, money to come out of there. Canaries in the coal mine, I have two curves that I look at nightly that represent the larger state of the market. My hope is that these will turn over and give me a signal before the market dies. The Canaries had a pocket pivot on Friday. Here's a list of the stocks in this index. Everything is green, including the Bongo Weekly, which is my buy-sell indicator. These are in a buy, nice lower left, upper right, near highs, bullish. The Scott Index, I put this together June 27th. These were leaders now almost 3 months ago. And I put these together with the idea that in the past, when I put together a leaders group as taught by Ian, that the leaders would roll over before the market did. And as you could see here, they're not rolling over yet. You did have a red day on Friday. Both the index and the Canaries are squeezing. I'm not sure it's got the same implication as an individual stock, certainly when it's 30 stocks. Too many can be up and down and neutralize, but still bullish. So markets rise despite Hurricane Harvey and Irma. North Korea nukes and missiles, terrorism in London, and fighting in Congress. The economy is booming. The Census Bureau noted highest ever middle-class income in 2016. U.S. job openings at record high. Unemployment is steadily low, and a GDP surprise to the upside. So, is this market the what me worry? Is this insanity? Or are we in a life-changing market rally and in the early innings? Time will tell. I'd like to think we're in the early innings and I can double or triple the return I've had this year before it's over. Yet most of the pundits would say that we're about to come back down. I'll let the market tell me what it's going to do. My job is to have an understanding, know what to look for, and be positioned the right direction. Please note there is a Fed meeting this week, and what could kill this market would be if we see a reversal of the last decade and we see the Fed and the EU decide that they need to quickly tighten because of too much inflation. And if I remember correctly, there was some CPI information that was a little hot this week. Of course, they blamed it on energy, which is not a core component, and energy may be skewed because of the hurricanes. So here's a slide that you could interpret the S&P is in a bubble. You could also have put a line in about where my head is here, and a line here, and then say there was in a box that broke out in the middle of 2013, and that box had about 800 to 900 points. At the top of the box, it was at 1,600, and you might predict, based upon that model, that our target should be about 2,500, of which we're about 25 points away. So if you want to be bearish, and I'm not saying that's wrong, you can argue that we've run up from 700 to 2,500 without a major correction, and that, here's what we should expected, and are we at least going to come back down to 1,600 and test? That's a very bearish approach, and I'm not that bearish. I'm not as bullish as the next slide, but let's take a look at the NASDAQ. This is the NASDAQ over the exact same period of time, looking at the bubble high in 2000 and then the high in 2015. And then a retest of that high earlier this year or late last year and a breakout from that high. Is this a 16-year Darvis box that has about 4,000 points from top to bottom in that box? And do we have a run up to 9,000 before it's over? I put this here, and yes, I am a little nuts, and yes, you can think I'm crazy, but if I'm going to say that this is a sign that the market is done because it's run up as much as the bottom of that, from to the midline, from the bottom to the midline, and from the midline to where we are about the same, and from symmetry, we should roll over. I get it. Part of me thinks that's going to happen. But then I look at this, and maybe not. Something for you to think about as well. Let's do my usual top-down look at TradeStation, HGSI, look at some interesting groups and stocks, and call it a night. Obviously, with what I started with, I've got a few things on my mind. Do appreciate y'all watching this and subscribing on YouTube. Someday I'll probably retire from this now that I got a boat and I learned how to play golf. But as long as I'm having fun and my life doesn't get in the way, I'll keep doing it. So 6 points I look at. Are we in a buy or sell on the daily, weekly, and the monthly? I look at the color of the price bar. That's an elder indicator. If it's green, I should be long or holding it. I shouldn't be going short. If it's red, I should be short or holding. I shouldn't be going long. If it's blue, it's neutral. There is no signal. Third thing I look at is how am I compared to the envelope? And I know that we can stay above the envelope for a while, but eventually we come back in. Notice we don't automatically go right to the bottom. We often go sideways. The fourth thing we're going to look at is going to be, let's see, are there red or green dots? The red dots on top of the price bar suggest there's some divergences in the MACD. Notice those can go on for days or weeks before the price changes. A green dots on the bottom would be a positive MACD convergence. I come down here, I look at the high jump bar. How high are we extended from the major moving averages compared to the last 200 days? And we're at about 48% of the max extension, certainly not extended. And then I look at my bongos and I pay a lot of attention to the weekly bongo, which is my buy-sell signal for the most part, and that's in the middle here. The daily, weekly, and monthly bongos are all green. So I look at the E-minis, it's a bi-weekly and monthly. Only negative here is it's blue. It's above the envelope, probably needs to go sideways before, or it's going to correct. But at least on the short term, this looks really good. If I go down and I look at the YMs, so the Dow futures, very quickly, I see 3 green bars. I see red dots and a green thing here. I see 45% in a green bongo. Again, I'm above the envelope and I've got the divergence dots, so I know that I'm getting long in the tooth here. I didn't say I'm expecting a crash, but I might expect some sideways motion. What we've seen is some indexes continue to roar while others go sideways. For example, let's take a look at the NASDAQ. The NASDAQ has a little bit of room. It does have some blue bars in the red dot. It's in a buy in all 3 time frames. It is within the upper part, but still within the envelope in a buy. It's at 51% in the weekly bond goes green. I think the NASDAQ here looks pretty strong, and it's already been going sideways, so maybe it's ready for the next run. Quickly, the Russell futures. And you could see green, 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 blue bars, no dots within the envelope, 43% in a weekly bond goes green. I can't see it. You rarely see a better picture of the 4 indexes all showing multiple be long signals. Again, this is getting long in the tooth. The fact that a couple of them are above the outer envelope and some blue bars are painting should give you a little bit of caution from throwing every penny in the market. But I see still a very strong market. You want to see a weak market, you can look at the dollar. The dollar, it showed a sort of a relief rally here. You notice the green dots started popping up. I got a buy signal, ran up into, these are some of John's lines, pivot lines, and failed. It's in a sell weekly and monthly. That is not a strong chart. 14% on the high jump bar and the weekly bongo is red. My expectation is the dollar's got more work to do, and it's down 0.2% right now. Oil is actually up a little bit, above 50 now, and you could see it's been in a buy signal, turning blue here, green in a buy, still in a monthly sell, not at the high jump bar. And gold, which had a very nice run with a weak dollar. Personally, I think gold goes higher at this point, but I'll have to wait till my charts tell me when that's going to happen. I think the dollar's got a more way to fall, but as long as the dollar holds, then you would expect oil or for gold to hold. And you can see gold is in a sell signal with red, but it's in a longer term weekly and monthly buy. The bongo is still green on gold. And notice it did get up here, and I called it out last week when its high jump was at 99.20. All right, that's where things correct, folks. And it's corrected, not a shocker at all. That's why I do the high jump bar. Thank you, Ian, for another awesome, awesome, awesome tool. The VIX, of course, I put it to TradeStation and other programs, but the concept, and I'll review it in our meeting, was taught to me by Ian. And you can see the VIX is in a daily, weekly, and monthly sell signal, red bars. In a bongo, we just went to a sell signal, so the VIX looks like it wants to go lower. So now I open up HGSI, and I may have to resize things a little bit. I always have to change my resolution, or you'll need a magnifying glass and a lot of bandwidth. I learned that the hard way. No one wants to download 4 gigabyte files. I don't want to store them on my computer either. I don't have that many gigabytes on my SSDs. I got plenty, but not to do that. So I'm just setting up the way I like to have it set up personally. And the designer is sort of the file cabinet where I can look at lists, components of various indexes, components of ETFs. I'm going to go down to the user groups. I'm going to go to the Woodward and Brown user group, and I'm just going to look at something that Ron Brown put together, Major Markets Plus, and it's got the major ETFs or major indices. And I'm going to do a top-down view because it's only price and volume, and it shows me the strength end of the week on the small caps and the mid caps, the NASDAQ up here, and on the bottom are volatility, gold, the dollar, and silver. Interestingly, biotech down here as well. All right. I guess biotech mattered which ones because I made some money in biotech this week. Next, so when I see the small and the mid caps up top and the NASDAQ up top, I know I made money if I was long the market in equities, which I was. Let's take a look at some of these. Again, this is part of my sizing problems. Let me size this puppy up. I was trying to make that big chart in HGSI, and I just couldn't make it work. So I went into telechart. Here's the S&P 500. I think I drew this last week. Still in the channel, getting up near the channel. Kind of looks like it's slowing down. It's been range bound going back for months. If it gets up to the top, it probably is going to come down to the bottom. Notice it did go to a weekly bond go green for the first time in several weeks. And it's top part of the channel, but it still looks bullish to me. And I could make it a little bit bigger, and I certainly like that. There you go. And you could see, although someone said it wasn't a high, it looks to me like certainly from this rally, you got an all-time high on the S&P 500. It's hard to be bearish when you're hitting all-time highs, isn't it? Unless you're short the market. Now, what I talked about last time, I wrote this a week ago, and I said the market had pulled down to the 50, and I thought that was potentially bullish. And I said there were three scenarios that I would think. This is what I learned from Ian. The high road was it went straight up. Here's my arrow that I wrote last week. That's where it closed. The low road was went straight down, and the medium road was it pulled back and then retested the 50, or could have pulled back here and retested. Beautiful chart. The Dow also at multi-year highs. I don't have a high jump there, so very quickly I could look at a chart of the high jump, and I could see it's not at the top here, so the high jump isn't triggered either. So the Dow looks remarkably good. I might look at the NASDAQ. Not quite at all-time highs, it's right below them, but certainly right by them, green on the weekly bongo. NASDAQ looks good. And the Russell 2000. Again, the weekly bongo's green. Big move up off the bottom. Looks great. And as we saw before, the dollar looks like it's weak, and you could see the dollar failed here at the 17 and an open down on Friday. Now, does it gap up and give us a morning star on Monday? I doubt it, but anything is possible. You have to be prepared. And again, the VIX should look pretty horrible, and it does. You lose money in equities when it goes up. You make it when it's coming down. You could also make money when it's going sideways. It's still on its way down. Notice in a weekly bongo, so it's in a sell signal. Gold is still in a weekly buy signal. I thought perhaps it was going to hold on Wednesday and not break through. I still think the dollar goes lower and gold goes higher. All it takes is a little bit more nukes and rockets from Korea for it to pop again. If I look at gold on a weekly chart, you could see it's been basing and just broke above those moving averages in the last couple of weeks. I wouldn't bet the farm on it until it starts going up, and that's kind of how I'm going to play it. And silver pulled into the 17. Notice the bongo is still green. So I feel good about the market. The next thing I do is I look at industry groups. I notice I have 174. If I go to the force up, I can see two-day force, which is price and volume. Tracking, I've got 59 groups to the upside: semiconductors, entertainment, specialty pharma, biotech, exploration. All right, some typical HGSI growth stock groups. I've got, on a longer time frame, I've got 62. So that's over 5 days. 2 days to the down, I've only got 8 groups. Investment, midstreams, which I think is interesting because I saw some that look good. Large pharma and devices. So here's sort of the dichotomy of healthcare. I showed you biotech, specialty pharma are on the leaders. And you could see large pharma and medical devices are laggards. Tobacco, internet media, and home builders. All right. And longer term to the downside is 24, led by steel. So this is a market that's been up long enough. So the majority of the shops and stocks have triggered a long-term feeling, long-term bullish. Then I right-click on the semiconductors, change to index group, and I would look at the top groups, top stocks in each group. Let me pause this and fix. All right, I didn't want to confuse you with the volume price analysis tools that Ron has. So here's NVIDIA. Let me give it some more room here. Sorry, I got my sniffles, my allergies as always. Sideways since June, breaking out again, pocket pivot, kahuna, mobile breakout out of a squeeze, and a new weekly bongo buy. I saw some price targets at 240, 250. I think it runs up to 200 at the minimum. 20 points doesn't seem like much on a $180 stock, but you do an option play and you can make some money on this. Options carry a lot of risk. Make sure you know what you're doing and you do the option industry consult, before you go and invest any money in options. Intel breaking out here, kind of a sideways pattern to me. Broadcom, is it ready to run? It's been going sideways for months, and it had a mobile breakout from a squeeze and a kahuna. It's still in a weekly bond go down. I actually have an option position on this one. Texas Instruments, looks like Broadcom breaking out. Look at the volume that came in on Friday. AMD, not broken out yet, tracking on the 200. I'd be watching it, not buying it. Qualcomm's been an ugly chart, still is. So the ones that I liked up here would have been the NVIDIA, Broadcom would be the ones that would interest me. I saw a buy come in on, not Qorvo. Well, Qorvo did look interesting to me. Uptrend breaking out here. Green mobile breakout from a squeeze, pocket pivot, and a kahuna. But somebody in Oculera put a buy signal out, OCLR. And it's been a beaten up stock. It's in the same as AAOI and Lumenum. And I don't see it yet. It's got to get above the 200, but it could be. There it is, number 10. Next group is entertainment content. I don't know these at all. I have bought and sold them on technicals before. We can see Walt Disney has been hammered pretty hard. It's a bottom fishing play in a downtrend. It did have a pocket pivot, maybe, but not yet with my money. 21st Century Fox, ditto. Time Warner. You know, the problem with the stock that's gone sideways, even though it's sideways in an uptrend for 8 months, is how do I know it's going to break out? I don't want to keep it sideways, although how much is their dividend? 1.6%. It had a pocket pivot in kahuna. The group strength turned up. It's still in a weekly bongo. I'm going to pass. Nope. So I look at this group and I see a lot of movement off the bottom. You know, you look at the index, it's done nothing from May to September and it broke out. So it's probably worth watching, but not yet for my taste. Specialty pharma. Don't know anything about Mirati or I know something about Amicus. There's a lot of small companies here. Mirati had a big gap up, a viable gap up. I urge you to read Morales and Catcher of how to play this. You could buy it. It's in the middle of the gap up day. You'd be buying it around 11, I suspect. You'd want to put your stop probably down here. So right away, it's a pretty big stop, but be tight. But there are gap stocks to buy, and this is one of them. This is and those are viable gap ups, and that's what this is highlighting here. Don't know enough to say anything else more about it. Amicus, uptrend, sideways, looks like it wants to break out. And I usually don't go fishing below the index. Let's see if there's anything here I wanted to look at. I have a couple of these stocks. Everybody wants the next Supernus. All right, it's had a beautiful run. Looks like it might be ready to go again. I don't like it because the earnings are slowing down. But if you go back a year ago, you would have seen us talking about this when it was $16, $18 stock with great earnings per share growth coming into the stock. I go down the top 10. Here's biotech. Take a look at some of these. This is one I do own, Halozyme. You got lucky when you bought an option, it's out of the money, it's about to expire, and then 2 days before, it has good news and it goes deep in the money. This is Halozyme, doesn't make any money. They inked a deal with a drug company to use some of their technology, and boom. The thing about biotechs is it's probably a lot like airplanes. If you want to be a billionaire, do $2 billion into biotechs and you'll lose half of it. They're tough because you think about most stocks, you need to know about earnings dates. But in biotech, you got to worry about new approvals. But then you have to worry about meetings like American Society of Hematology or Clinical Oncology or Rheumatology, because data might be presented there that you don't know even exists. And then the worst thing is you may have 4 companies developing a drug in the same class, and one of their drugs blows up and your company gets hammered. So even if it wasn't your company. So they're risky, but when they work, think Kite. Recently, I'll show you that in a second. They work well. This is a beautiful pattern, stair step up here, base and breaking out again. It's certainly extended. Notice the high jump is up here at the top. But again, Bible gap up rules apply. Doesn't make a whole lot. It doesn't make any money. Intercept. I don't like that pattern. It didn't have a good day. If I want to buy biotech, I buy biotech. This is one of them I buy. As you can see, it's a gradual but a nice uptrend. Had a pocket pivot, weekly bongo, good earnings per share growth. Probably has 20, 30% growth from here, and I saw some recent buys on it. This is one thing that I buy. Alexion has had its moments. They got rid of their CEO. It was actually, I knew him well. And you can see it's traded off from 200 range all the way down to about a little bit 100. It's got to get above that 500 weekly moving average, but you can see Alexion has had some movement. I think I like Celgene more. The other one to point out, I want to show you about, this is why you're in them. I started about a year ago with some Kite calls that were $35. Probably. Must have been back in this area. And maybe they're 45, 40, 45. And I bought them, and then the stock broke out, and I rolled them up, and I've been holding and holding, and then all of a sudden my $40 a share becomes worth $176. Not bad. That's why you own biotech. But for all those, you get them that look like this too. Here is one that I was sure their drug, that a drug would be approved, and then the FDA said, no, not so fast. So that's the downside of drugs. And there's many, many more. In fact, that wasn't even the worst of it. Here's when it got turned down. It was a year earlier. And that's something that's a risk factor. You had Sarepta as another one, which tells the story both ways, and that it basically, here's the times looking to get approved. Nope. And then all kinds of infighting, pressure on the FDA, the drug gets approved, pull back down, and now it's going again. So you have to know more than just earnings dates on biotechs. So I told you there's a couple ways to play it, and what I usually do is I buy an index. And the way I like to play biotech is if I'm long biotech, I'm doing LABU. And if I'm not long biotech, I'm not playing LABU because it's a 3X ETF. And I'm currently long it for whatever it's worth. All right, going down the list, exploration and production. You'll see a lot of things that are junk off the bottom. Conoco, not necessarily junk, not necessarily off the bottom. It's moved up. It's got to get above that 200-day moving average. Pays a 2.3% dividend. EOG, the chart patterns are all the same. They're all downtrending stocks. Here's EQT, broke above. Oil goes up and stays up. These probably have a chance. Oil's at the top of the range. Perhaps its natural gas will be better. I'm in COG. And I've been nibbling on Chesapeake, which is a shell of what it used to be at the best. But I care about stock prices, not about companies, and I'm just seeing if I can play this. And it's had a percentage-wise a decent move. Look at the earnings per share coming in. That's kind of why I bought some Chesapeake. They got all kinds of litigation and other issues, so I don't highly recommend it. I go down, electrical power. Yeah, I guess Generac's here because everybody in South Florida is buying generators. So here's Eaton Corp. You can see it's moved up above the moving averages, multiple pocket pivots, a kahuna as it took out, and it's got a weekly bongo green. That looks interesting. And Generac does this every time you have bad hurricanes. It breaks out and it runs. Fundies aren't that strong. The generators are pretty good. We'll see if I have one of them before the next hurricane comes. Restaurants, interesting with the number of restaurants hurt in Houston and South Florida, but I can't resist Domino's Pizza. The guy that started Domino's went to Michigan, flunked out, opened a pizza place in eastern Michigan, which is a city next to Ann Arbor, and that became Domino's Pizza. And at one point, when Bo Schembechler was the coach of Michigan, he gave them the franchise in Ohio State. Later went on to own the Tigers, and a very wealthy guy, Monahan. And you could see a pullback to support, broke above the 50-day moving average on some pocket pivots. It's got good earnings per share growth. Might be interesting. I don't do a lot of restaurants. Other thing that actually made one of my lists was Shake Shack, which is a surprise, but it would be buying something off the bottom. You know, if you believe in Darvas boxes, here's the bottom, here's the top. You could see a run from 32 up to 37 to 39. Pocket pivots in a kahuna, just not my cup of tea. Semiconductor manufacturers, Applied Materials been the big puppy here. I actually had this. I'm now in UCTT. Nice uptrend, been kind of choppy since June. I would look for a reason to get in. I wouldn't just get in. Notice the weekly bongo is red. Teradyne looks very similar, but had a weekly bongo go green with a pocket pivot and a kahuna. Probably would be more interested in going in there. Fortunately, a couple days ago, like Tuesday, I went into UCTT. And why did I go into Tuesday? Here's Monday. I had a kahuna, a pocket pivot, and a mobile breakout from a squeeze. I put a buy stop, basically said if I get above the PSAR dot, then I'll buy it. I bought it, and then it sold off the rest of the day, and then it broke out on Thursday and Friday. UCTT, why do I like this? I love the earnings per share growth. Not hard to figure out what I like. Telecom carriers, and I could say something, and I'm going to be very good. These are great dividend pays. I like buying them when they're low and selling them when they're high. AT&T, let's make sure we get the right picture. It's low, dividend's 5.3. They're not going out of business. They'll probably benefit from the iPhone cycle. Verizon, in the middle of its range, 4.8% dividend. CenturyLink, crappy company, huge dividend, down at the bottom of its range, pays 11.4%. But if it drops $3, that's 20%, and you may not make up your 20% very quickly. So CenturyLink, a little bit more risky, but big dividend for that risk. And I go through the top 10 on a nightly basis, and I'll just finish on, I'll do the next two. Very quickly, oil gas services. This is the Baker Hughes GE tie-up. They're probably going to benefit as much or more than the exploration companies with rising oil. Certainly a lower right-hand corner, not a lot to get excited by. FTI, P10. So here's the exciting thing about these. They don't look like much, but they were major bottom dwellers. Had you bought on the bottom and sold it at the close on Friday, over 18 days, you would have been up 26%. Got to have a lot of shares to make it worth money, but Halliburton, that's one that I've been playing, and this one here, not as much up off the bottom, but it's been up 11% in 13 days. Another big kahuna is Schlumberger. And then a couple of the retail stores have made my radar, specialty apparel. So I am currently in Gap. I'm actually in 3 of them. I forgot. Nice little run up here. See if this is a wedge and breaks out or if I need to cover. I am in American Eagle Outfitters, AEOS. Got to get above the 200, but off the bottom, 10 up to 13.5. That's a big run. And I am also in Abercrombie and Fitch, which had the best chart of them all. Breakout, and now a nice little 35, 40, 30 degrees run up. Great earnings per share growth. And pays a 5.6% dividend. Over the weekend, I was looking at a couple of these. Tailored Brands, kind of a nice shallow fry pan, I guess they call this. I'd like to see it break above the 200, which would also, then maybe it'll start to fill this gap up to 22. So Tailored Brands, I'm going to be watching. And I know my mom loves Chico's like probably most of our mothers and wives, especially the older they are. I don't see this one yet. I'm trying to remember what was the other one that looked interesting to me. Oh. Hard for me to buy this one too. Deckers, the guys that make Uggs. But it had a kahuna and a pocket pivot on Friday. I have to see it get above the 50 and take out the PSAR dot. I saw that, and it actually looked better in TradeStation. So that's what I do. I go through the top 10 to the upside. I don't have time tonight. I sometimes go through the top 10 groups to the downside. There were a couple things I did like on my buy watch group. My buy watch is pretty big because I put a lot of things that are ifs. If this happens, I might be interested in it. So Boeing has been a leader on the transports. Terex is a cement and infrastructure play. Really, is this week's? You know what? Check that. Let me kill that because that was last week's stocks. Well, that's not this week's. And let me bring up this week's. Hold on, I'm going to pause it. Okay, I'm back. I'll tell you, I just love Dropbox. I went on my other machine, saved the user group, and just imported it in here. And it looks like I started with it here. As I said, my buy watch list has some good stuff in it, stuff that's not so good. So I'm just going to go through maybe the first 10, and then we'll say goodnight. NVIDIA, we talked about already. Breaking out, love the company, love the stock. Bank of America, kind of looks a lot like NVIDIA, sideways, and then will it break out here? It had a bunch of kahunas in a row and a pocket pivot, but it's still got a weekly bongo red. I buy and sell my options around it. I own the stock, not much premium to sell the option, but also cheap to buy it. It's going sideways. They need interest rates to go up. Western Digital, been a big winner, sideways, had a kahuna on Friday, still in a weekly bongo down. First Solar, hard to understand why it's, well, the multiple's not that bad, but price going down. Bible gap up on Friday. Kahuna's pocket pivots. I'm in this one. Showed you ConocoPhillips. Macy's. This was another retailer that looked interesting. Again, it's a bottom fishing stock. It's a Jesse Stein stock. It's been beaten up. All right. But if you had bought it here and still held it, you'd be up 17% in 19 trading days. I'm not saying that anybody would have bought that stock there or that I would have bought it, but that's why they're showing up on the list, because they're starting to move. This is one of the ones that I'm going to outline at my upcoming meeting. Hold on a sec. Yeah, I thought I could show you, but it's on my phone, not on my Thinkorswim. One thing Thinkorswim does is you have a column by your positions, and then on the column it shows your P&L daily, et cetera, but it also tells you your PLL, your profit and loss over the year. And both WB and BZUN have been major runs, six-figure wins for me. The two of them bought me a boat, actually, not long ago. And what I'll show the people at my meeting is there's your buy signal. You got a fanning out of your moving averages. You got a breakout. You got a mobile breakout from a squeeze and a weekly bongo green and a kahuna. It has not until here violated the 50-day moving average. Earnings came out, I believe, on this day. So I will show you how I managed the stock, how I did a synthetic position, which cost me nothing, literally cost me nothing to buy it here. And then at its peak, I sold a put, I bought a put at the money and sold some out of money calls to pay for it, and actually made money here. And now I'm back at an all-time high on the account, on the instrument. And I'll show you how I found the buy using TradeStation, Thinkorswim, and HGSI. I'm going to show you the option position I put in, the stops that I used, and how I managed it around earnings, which actually turned out to be a smart thing because I kept the stock, I kept the calls that I protected with the puts, made the money on the puts, and now the calls are back up. Like this one a lot, and frankly, WB, and that'll be the last one. I put it on because it looks like it's slowing down. Same time frame, same story. Breakout with a pocket pivot here, a Bible gap up. We talked about those earlier. Green bongos, and this has had a hell of a run as well. And it had a little bit of a sell-off with earnings. It felt worse. I think it was over here than it looks, and it's rebound as well. On that note, I'm going to say goodbye. Just before you go, two things. I don't show you my performance for any other reason except sometimes it's nice to validate that actually I do trade and I do make money trading. But more importantly, I talked with George Lee today. I told him a little bit how I was doing. I mentioned that it's a great year for growth, and that's what I'm going to show you right here. S&P 500 last week, it was a great week all around, was up 1.58%. Not a great week for the IBD 50, so growth was a little bit out of play last week, was up only 0.9%, not bad on a weekly basis. The buys that I filtered with John's indicators were only up 0.5%. My holdings were up 2.21, and some of the things up here. I just want to show you the WBs and the Scott All-Stars squeezing here. These things, if it has the initials in front of it and a date, these things are done for you automatically for free in HGSI and on a daily and intraday basis. If you look in the designer and you go up where it says Smart Groups, you'll see a couple of names, including mine, and every time you do an update, this will be updated. Stocks with big volume, pull back to the 50 with a kahuna. There's that Deckers I was just looking at. Or you could go to Ian Woodward and Ron Brown, and you could see a number of their other scans. So these are done constantly for you whenever you update the program. And you look at the top of my spreadsheet, that's where all those came from. The other thing I want to just we're going to go back to something I showed you. Yes, I'm not sure I believe everything that I see in these charts, but hold on a sec. Something's going on. And if I believe that we're in a bubble because of the S&P 500, here was the peak around 2000, here's the peak around 2008. If I believe we're in a bubble because we've now run the same distance from the low to the top of this bar here on the breakout, certainly looks extended. If I buy that, then how do I balance that with we just broke out within the last year and we might have a long way to go according to the NASDAQ? Something to think